Right, if the event is for general information only, not intended to provide specific advice or recommendations for any individual, any performance reference is historical and no guarantee of future results. All indices are unmanaged, may not be invested into directly, and economic forecasts set forth in the event may not develop as predicted. There can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial, do not represent the views of LPL Financial, and securities are offered through LPL Financial, a member of FINRA and SIPC, and investment advice offered through Gimbal Financial, a registered investment advisor, and a separate entity from LPL Financial.
Hey, welcome everybody.
Good morning. Good morning. It's looking a little different this morning.
Yeah, I tell you, well, you know, we're missing Keith today. Keith is somewhere south of us enjoying. I think they're celebrating a 30th anniversary, which is pretty cool.
That's awesome. That is so awesome. I know they're staying at a really cool lighthouse,
right?
Which is really cool.
Which that's Gimbal approved. I mean, you know, we want to try and keep a nautical theme going on. So if you're going to go on vacation, you got to have some type of nautical theme to it. But yeah, welcome. You've got the varsity team here today. We look forward to Keith coming back, but this is the varsity team. And I stole that from my friend Luke. He's always talking about the varsity team and stuff. And so anyway, it's good to be with everybody today. And if you're living in Indiana, it's cold. And so like I have like 2 shirts on today. And I think the pleasant weather has left us until about March. So embrace it. But yeah, what's on your guys' plate today? I know Eric and I were talking a little earlier about supply chain stuff. And Eric, tell us about how you're sleeping. And maybe someone else on this webinar can understand and appreciate where you're coming from.
Yeah, so I was diagnosed with sleep apnea earlier this year, and the doctor informed me that there's actually a Cpap shortage, and a Cpap is the machine that helps you just continue to have proper airflow throughout the night. So there's about 3 million Cpap machines that had to get recalled because of a major issue with them. And so now I've been pushed back pretty far on getting my Cpap. And so I've not been sleeping as well, but it's been interesting to think about the supply chain of just that medical device and how many other people need it.
Yeah. Yeah. So I'm sure it's off the coast of California somewhere, or just waiting to be wrapped up in Christmas paper underneath the tree for you to sleep better at night.
Yeah.
But this has been kind of an interesting week in the marketplace. Eric is also, and Amanda comes from a family of this. Is all, you know, you guys, you know, you represent the new wave and of plug-in cars. We've talked about this, and there was a new IPO launch just a couple of days ago, Rivian, and the stock went through the roof. This is not me suggesting you go out and buy it or any other EV stock or any of that stuff. I'm just talking about what's happening in the marketplace. You can Google this stuff's on Yahoo's page. But yeah, Rivian it shot through the roof. And it was one of the, like, as far as performance goes, one of the best IPO openers since a little company called Alibaba, which that one hasn't been doing all that great lately. But it was a pretty successful IPO by performance standards. And so those electric car companies, that's on the rise. And it's pretty cool to see some competition coming in. I mean, Tesla's pretty much own the luxury car market, electric car market, and to have some competitors coming in, that's just what capitalism does. And it's really exciting to see new competitors coming on board. Have you guys ever driven a Rivian?
No.
I have not.
I haven't even seen one on the street.
Are they
no.
on the street?
No, I have not seen one either.
This is actually breaking news. This is the first time I'm hearing of it.
Oh, really? You haven't heard of Rivian?
Well, let's switch over to the
here first for Amanda.
Let's switch over to the markets. I'm going to pop my screen on here and share with you. We're going to look at the broad-based index and see what's been happening. This is the NASDAQ. The NASDAQ is roughly 3,500 companies. Most of these companies are growth oriented, meaning they're not plugging a lot back into dividends or sending you a paycheck or boosting your accounts by ways of yield. These are mostly growth oriented companies, and I like growth companies. Growth companies are innovative. The spaces they're in are, medical, financial technology, fintech, automotive, aerospace. There's a lot of really cool things going on. And so the NASDAQ has just been rocking. The whole market's been rocking since the early pandemic in March. And here recently, the last couple of days, if you can see where I'm putting my cursor, we had a pullback. We had some selling, and we haven't had that type of selling in a while. We'd have to go back all the way to September to see that. But normally when choppiness starts to happen, it's like a warning shot that goes out and says, okay, what's going on here? And at the end of the day, what's going on is there were just more sellers than buyers. That's it. There's always a war for price action. And that price action is determined by who's selling and who's buying. If you look below where my cursor is here, I'm showcasing the volume. Can you guys see the volume? Okay. Where my cursor is?
Yep.
Okay. These two red lines. Yeah. So these are the volume. And then up top is the price. You can see the price, the high this day was at 15,867 and the low is 15,543. But then down below the volume, this is just the amount of shares that were traded that day. And so the volume, what it tells us when it's above average on a buy or sell, that tells us that the big institutions are moving money around.
Is that what that red line is on the volume that goes through the average?
Yeah, that's exactly right. Yeah. So this red line going across horizontally, that's the average. And anytime we get above that, the average, that's institutional money moving around. And institutions could be mutual fund companies, insurance companies. It could be college endowments, things like that. And so this isn't, this isn't my uncle or your Aunt Sally buying and selling. This is serious, big money institutions moving the market. And so on these couple of days of selling, we had higher than average selling taking place. But if you look to the left, just to the left, my goodness, a lot of really aggressive buying happening in October. So if you were looking at your September statement and it was down, you can see, why that was in price action here. But then things started to rally back pretty nice in October. And so as with most rallies, you just have some profit taking from time to time. We're watching it. We're keeping our finger to the pulse here to see where the buyers and sellers are going. But there are some exciting things happening in the marketplace. New companies coming on board that just didn't even exist a few years back. And in that space of automotive, by the way, it's been great to see GM plants, Toyota plants operating at capacity again. And so there's some really good stuff going on. But that's what's happened in the market this week is we've had some pullbacks. If I move over to the S&P 500 here, this is a group of 500 stocks. This collection of stocks, it's going to have some technology names in it. It's also going to have some names of conglomerates, where my toothbrush and toothpaste come from, stuff like that. And you can see it pulled back as well, but the volume was not quite as high. And so the real volatility came from the growth-oriented companies, the technology-type companies. And that's where the spike in and volume came this past week. I'm also going to highlight a company here. This is Johnson & Johnson. Again, not a recommendation to buy, but these guys are in the news. They're talking about breaking the company into two parts. One would be the baby powder part, and the other would be the drugs and innovation part. And so when you see stuff like this in the news, that just tells you that innovation's in motion. That tells you that there's a company that has a product that they've been successful with over the years, and they have hopes for new innovation in the future. And this is nothing new. I mean, companies do this. Back in the day, about 5 years ago, this company, Alcoa, they split off into two. They split off into two companies. They had a profitable aluminum, or as my friends from Oxford say, aluminium type business. And then cast products, stuff like that. And they split off a company that focuses on aerospace, automotive, advanced manufacturing, innovation. And so when J&J announces something like that's nothing new, and that's just innovation happening within the company. And over the past week, I had the pleasure of spending some time with a friend of ours who works for a real cutting edge tech company. And this would be like a Facebook or a Tesla or an Amazon or something like that. I mean, this company he works for is it's like rocket fuel growth. And I was asking him, like, where does the innovation come from? Do you guys buy it? Do you have teams that work on it? And it was a combination of both. And so when you see a company that's like Rivian that's coming out brand new to the market, it's had years in the making. It's had venture capital funding. It's had early investor funding from probably friends and family who are willing to buy onto this idea. And so when things hit the marketplace, hit the trading floor, and give you the opportunity for ownership, it's just really exciting. It's dynamic. So that's what's going on in the marketplace. And I'll just go ahead and switch gears for a minute. Unless you guys, do you have anything that you've seen in the marketplace that you want to talk about?
I had two things just about innovation and mainly inflation. I've gotten multiple emails in the last month about companies coming out saying that they're increasing prices for next year, something that's been pretty standard for next year, but they're just giving the consumer a heads up that their prices are increasing. So that's just something we've been talking about on a regular basis here about inflation is here, inflation is real, not necessarily hyperinflation, but it's just a matter of even like one thing that I subscribe to is increasing by $1. And another thing might be increasing by $4. That's not a subscription-based product, but just that costs are going up in general. So that was just something I observed.
Yeah. And, I think when we look at inflation, there's a couple things that you can have within your toolbox to help fight against it. And one of those things is just to know where you're at. And to know where you're at, you can just record your assets, what you own, your liabilities, what you owe. If you have some liabilities, record down what that borrowing interest rate is and be real. If your mortgage, it's probably some ridiculous low interest rate comparatively to the last, 50 years or so. It's probably pretty low. And that's great. Yeah, high five. Okay. But, there might be some other things on your balance sheet that you're not that excited about. And maybe that's personal debt. Maybe that's a higher car loan. But just be real, be honest with yourself at it and write down the interest rate, because if you had to borrow for that money again in the future, it's probably going to cost you more. And so, start with the assets, start with the liabilities, write them down. You don't have to be fancy about it. I mean, you could probably just even Google Sheets, or you could probably just Google balance sheet, and there's probably a great way to do this. You could even just do it on a white sheet of paper. writing down your assets and subtract out your liabilities. The goal is to get those liabilities off. And when you have those liabilities off, you're not fighting the inflation rates of borrowing. And so it's like it's like adding instant juice to the ownership side of the balance sheet. And something I was thinking about with that is just, it's one thing to consider inflation as you're working, as you're working on your dreams, your check marking, your accomplishments. It's another thing when you enter retirement and you're living off your portfolio. You're living off of Social Security. And so as you're doing the balance sheet, the next question to ask yourself is, how much is enough? How much do I need at 65? How much do I need if I were to stop working at 70? And how much is enough it's hard to gauge, because things will cost more in the future. Prices will rise. Look at a brand new car today versus 20 years ago. You could probably price out a gallon of milk. But if you just want to simplify this, there's a couple ways that I would recommend that you look at it. Is you could say, okay, what am I living off of now? Not what am I making? What am I living off of? And for some of us, that might be what I'm making. It's okay, but you can start small. You can start small with saying, you know what, I'm making this, but I'm living off that. And what you're living off of will greatly impact what your retirement distributions will look like. So right now, the S&P 500 has about a 2% dividend. So if you had $1 million in your portfolio at retirement and you wanted to live off the S&P 500 dividend of 2%, that's 20 grand a year. 20 grand a year plus a person's Social Security might be 50 to 55,000, depending on where you're at and what you've put in. And so could you live off that? Could you make it happen? Well, one way to make that happen is wipe out the debt column before you retire. If you have that column wiped out, it makes it a little easier to do. The 2%, it's pretty crazy because things are going up in some areas quicker than 2%. And so that might mean that you're drawing down on principal, or that might mean if you're younger, I don't know if Social Security is going to be around. And so there's some tools that you could plan for, and you could say, well, if I save, if I live off of less than I make, if I can save this amount, maybe it's 10, maybe it's 14, 20% of my earnings, and squirrel that away towards growth. Plus, once you do ultimately flip on the retirement switch, you're not living off of whatever it is you were making, you're living off that savings rate. And so there's a lot of great tools that you can begin to have conversations on, write down, talk with us about, and think about, well, how will inflation really impact me? And for most of us, the way it'll really start to impact us is once we turn that retirement income spigot on. And that's the part where there's no mathematical formula out there with guarantees on it. There's financial software out there that can go back and track periods of time to say, okay, Eric, Amanda, there's an 80% chance that if you do this, that, and the other, you're going to be able to pull distributions from your retirement income over 30 years. But the way we like to look at it is just a year-by-year basis, keeping track of your balance sheet, keeping track of your spending plan, and talking about those things through conversation. And really by taking that simple approach, we've found that people get there and they do just fine. So yeah, inflation is definitely on the rise. Stuff's costing more. I don't know how much Elon Musk's future rocket into space will cost in 5 years, but he's selling shares to help him get there. So yeah, There's all types of things you can do. But yeah, that's what's going on. And I think the real question is how much is enough? And that's going to be different for everybody, but it's a great question to ask yourself, and it helps you boil down where you are in your spending plan. It's standard of living. That's really what it boils down to. And that may change over time. Your standard of living when you have kids is probably going to be more than when you don't. And your goals may change. I mean, it might be funding kids' college education. It might be funding your retirement. It might be being able to go down to Florida or head to the mountains for 2 months a year. I mean, whatever it is, the only way you're going to get there is by not spending everything you make. What's that, like grandpa's advice?
101, probably grandpa. My grandpa, at least, not my grandma. What else did you have for us today, Doug?
I got some ideas or conversations to talk about as we approach the end of the year. The end of the year tends to get really busy for most financial institutions. And so if you've got stuff you've been thinking about, now's the time to jump on it. And some of the end of the year things that are coming to my mind is, first and foremost, health is a big topic out there. Seems like you can't turn on the news, and I mean, health is always on the news, always something to think about. And one of our favorite investment vehicles is your health savings account. And a health savings account is super cool because you can put money in, you can get a tax deduction, you can invest it. You can invest it in, maybe some indexes, or you can invest however you want. Whatever your risk tolerances are and your goals and objectives, but you can invest your HSA, and it can work for you in the marketplace. If you go to take that money out, as long as it's used for medical expenses or to reimburse a medical expense, you're not paying any tax on it. So it's the only thing out there that has really triple tax benefits. And so as you're approaching the year end, if you have access to a HSA, you might call your HR person or, talk with someone in your company who's savvy about this stuff. But with a HSA, for a single person, the max is $3,600 contribution. And for families, it's $7,200. And unlike, some other spending accounts, you don't have to spend it before the end of the year. It's not a use it or lose it type thing like some other plans are. This is a really good one that continue to grow and be there for you and your family's needs. And so now's a great time to just say, hey, have we put any money in our HSA? Have we maxed it out? What would it take for us to max it out? And you can talk with your accountant about that to get some more details too. There's some other end of the year things I always think about, IRAs, IRA funding, and really something like this you have until April 15th. But it's a good time to think about it end of the year, especially if you wanted to convert any money from a Roth to an IRA. That needs to be done before the end of the year. That may be a beneficial thing for you to do. It may not. I mean, it sounds good, but it may not. And we can help you think through those things, like where you are in age, where you are in your retirement plan, income, and distributions. Just thinking through end of the year IRA stuff, that's a good thing to have on the mind. The standard deduction, that when you go to do your taxes, there's a standard deduction where it's kind of like an instant write-off for everybody. And so if you don't have any deductions to take, the standard deduction is there for you, and it's pretty high comparatively. And this happened a couple years ago, but $12,550 for singles, $25,100 for married filing jointly. So if you were to meet with your accountant, see what type of interest you've been paying, maybe on your primary mortgage, what type of gifts you've been giving to 501c3s, things like that. And if you're getting close to one of those amounts, it's a great time to have a conversation about it and see if it's beneficial to maybe do a little more this year compared to next year. And so I would highly recommend just taking a look. Again, end of the year planning, you got like a month and a half to do this. And so it's just tidying things up. And then the last thing, for those of you who are retired, just making sure that your required minimum distribution is in good order. I'd hate for you to miss out on taking your required minimum distribution this year, because the penalties can be kind of high for that. So some rule changes there. It used to be 70.5, now it's 72. And so, if you have any questions on that, feel free to give us a call. I'll give your accountant a call. Those are just some end of the year wrap ups that I'm thinking about. Otherwise, I think end of the year wrap ups are like, how many Christmas trees are you going to have? I mean, one of my buddies, he puts up a Christmas tree in every room. I bet, but we'll probably put up our Christmas tree after Thanksgiving.
I'm hearing there's a shortage. Christmas tree
That's
shortage.
exactly right. Yeah.
Just like a Cpap shortage.
That's right.
All the supply chains.
It's interesting. I got a call from a friend of mine from Gore's Christmas Tree, Jimmy Gore, and Gore Christmas Tree. They're in Broad Ripple. He called me and he said, "Hey, I just wanted to tell you we have a Christmas tree shortage, and so make sure to get here early, or else you might have to buy an artificial tree." And
it's the time of this is the year to invest in one.
Yeah. And so anyway, go get your Christmas tree. And while you're doing that, think about some end of the year planning. But that's all I've got. You guys have any other additions?
No, it's a beautiful fall, chilly weekend. Enjoy it. Leaves are changing. Leaves are falling. Get out and have a great weekend. No doubt.
How about you, Eric? Anything else?
No, I don't. I would agree with Amanda. Go outside, see the beauty of this world, and then prepare for the cold, bitter winter that we're going to get.
And if you want to go out,
go for it.
Yeah, I was going to say, if you want to get outside and follow these two advice, you're more than welcome to come to my house. Just bring your backpack blower and be ready. We'll be happy to look at leaves with you. And you're welcome to come over. We've got like a ton of old trees. And right now, the yellows out there in my neighborhood are just awesome. So I hope they're that way in your neighborhood too. But thanks for joining us today. And we'll look forward to having Keith back next week.
Right on. Have a great weekend, guys.